welcome everybody. I'm Maria Papitas. I'm with the University of Delaware Cooperative Extension, and we are here today with another of the DCRAC Delaware Money School initiatives. Today's theme is housing, and I'm really pleased to have a whole panel of folks here to help answer some questions. Please feel free to type questions in the chat. I'll turn it over to Jasmine now, and she can help introduce our esteemed panelists.
Thank you so much, Maria. So what I'd like to do is go around and kind of get us talking and get the ball rolling. If we all can start and introduce yourself, we can start with Mary Ann, because she's at the top of my screen. And if you can just tell us your name and your position and what company you work for.
Hello, everyone. My name is Mary Ann Cronin. I've been in the mortgage industry for over 30 years. I currently work with Fulton Mortgage Company as the mortgage loan officer, and I've been in this role for 22 years. And I'm usually assisting first-time home buyers or repeat buyers.
We can go to Stacy is next because she's next on my screen. If you can unmute her, Maria.
Hi, everyone. My name is Stacy Harrison. I work for Meridian Bank. I've been a mortgage loan officer now for 34 years. And I've been, I've done every aspect of the mortgage industry during my 34 years. I've been a loan officer now for a little over 25 years. And I do first-time homebuyers also, everyone pretty much, and a little bit of commercial.
We have Marva.
Hi, everybody. My name is Marva Hammond. I work for First State Community Action Agency as a housing counselor, and I oversee the housing program. And I am also the board president for the Delaware Federation of Housing Counselors. And I have been working in the housing arena probably for about 20 years.
Awesome. Thank you, ladies, for joining us today. I know that this time is there's a lot going on and people are kind of concerned about what next steps they can take, what they can do to resolve some of the hardships that they may be experiencing in regards to their mortgages and pursuing home ownership and things of that nature. So this discussion is just to kind of touch on some things that are going on throughout this pandemic, how we can help people manage their home ownership and their interest in home ownership going forward. So I have some questions that I want to start and just ask, and everyone can feel free to jump in if you know the answer. I'm also taking questions in the chat, so anyone that's watching, you can also type in the chat and we can give these questions to our panelists so that they can help us. So I'll start with the main question that people have been asking is, what should someone do if they're experiencing difficulty paying their mortgage? What's the best way to communicate with their lender? Like, what are their options?
So, hi, this is Marva, and I'll start off answering that. The first thing that you should do is, read your mail, answer the calls from your lender, and contact a HUD-approved housing counselor. We are located throughout the state. If you actually go to our website, it's www.defhc.org. And that has a list of all of the HUD-approved housing counselors in Delaware. And we're a free service. We're nonprofits. We're a free service that help you determine what you're eligible for, how to work with your lender, what best works for you and your family. Because we've been doing this for many years. You are going to get a lot of, mail or people calling you and telling you to do this or do that. Your best bet is working with a housing counselor. And like I said, number one, keep your communication lines open with your lender. Don't avoid them. It's very important. There's lots of programs that are available, but you won't know about them if you don't read your mail and you don't answer their calls.
Mm-hmm. I think that's an important tip because people get scared around this time. They're just panicking and don't know what to do. So that is a very good tip.
I was going to say, I'm sorry.
Okay, I'm sorry.
Go ahead.
I was going to say one thing is to reach out to your lender immediately if you are in a situation You don't need to prove any hardship at this time, that you don't have to prove that you're not working, but please reach out to the lenders so that they can mark your loan accordingly for forbearance.
Hey, Mary Ann, this is Marv. I have a quick question. I've had several clients that are not in a hardship, but would like to claim that they are in a hardship. And I've been on a couple of different calls with different lenders, and some lenders are saying that yes, you can be approved for this forbearance, but at some point you're going to have to show proof of the, the hardship. Do you or Stacy find that, like, is that true, or what are your thoughts on that?
No, I haven't had that problem at all. For the people who are calling for the forbearance, they've been calling and they haven't had to show any paperwork or anything. They just do it right on the spot.
Same here. It's right on the spot. You don't have to prove anything at this time. Now, 6 months from now, after the forbearance is over, that may be a different story.
Right. That's what my question was, is do you think or foresee that at the end of the forbearance, when they come to us and say, hey, I can't pay this lump sum, I have to apply for a loan modification, do you think the banks are going to ask for proof of that hardship, that they qualified for that forbearance?
No, because
I don't
during
really
the
think so.
6 months under the government guideline, we cannot report them delinquent,
Exactly.
and we cannot ask for any proof of no income.
Right.
That's
Okay.
good to know.
So
A lot of people have been
I'm just
asking
going
that.
to interrupt a second and say, for those of us who don't know what forbearance is, can you define that?
Forbearance, or do you want to take this, Stacy? Forbearance, from what I understand, is that it's just delaying the mortgage payments. It's not forgiving them, it's just delaying them. And during that forbearance time, we cannot collect late fees nor report you to the credit reporting agencies as being delinquent.
That's
Okay.
good.
Does interest still accrue during that time?
No,
Okay.
interest does not accrue.
Okay.
And neither does escrow. So I always tell people, if you can't make the most of your payment, majority of your payment, pay your escrows, because what's happening is those bills still have to get paid. Your taxes and insurance still must get paid. So if you can't make the whole entire payment, at least pay towards your escrow.
Yes, we do recommend that you at least pay something, or else when they do your escrow analysis at the end of the year, you will have a shortage
Exactly.
that will increase your monthly payment to where they try to make that up. Good
Exactly.
point, Stacy.
Awesome. Awesome. So then we'll go on to the next one and say, what home ownership requirements, like if I am interested in moving forward with purchasing a home at this time, is there anything different that I should look out for that may have not been the case prior to this pandemic? Or what, is there any things that I should, look forward to in preparing for home ownership during this time?
You want me to go first?
Okay. Well,
So I can speak. Go ahead.
Okay, go ahead, Stacy.
So as far as Meridian Bank is concerned, we have several investors have concerns about the debt ratio. How high they'll let your debt ratio go. So they have lowered the debt ratio down to 50%, where with FHA you can go up to 56%. So they've lowered it down to 50%. Also, when we were doing 620 credit scores for purchases, that's kind of like out of the window now. Investors are tightening up on programs, and we can do a 640, but your interest rate's gonna be a little bit higher than the average. So I would say have your interest rate, your credit score at least at 660 or better to get a decent credit score for FHA.
Same here. We require a credit score of 660 now on our government loans. Also, credit documents are only good now for 60 days instead of 120 days. So we always have to keep up to date on current pay stubs and bank statements because they now have an expiration date of 60 days.
Okay. And before it was 120 days, you said?
Correct.
Okay.
And tell us again what documents those are, pay stubs and
Pay
what?
stubs and the bank statements
Okay.
are good for 60 days now. They used to have a lifespan of 120 days. The credit report is still good for 120 days.
Okay.
And again,
Also,
to wrap all this around in one, again, I mean, I'm going to keep pushing housing counseling. It's a free service. We're everywhere. And buying a house, there's a lot of questions that people have. And we are kind of like house buying for dummies, you know, those books that you could buy and it dumbed it down for everybody. We will walk you through step by step, and we'll get you in front of like a great lender. We have 2 great lenders with us today, but there are lenders out there that, you know, aren't they're not as knowledgeable. So they're not going to walk you through the process, and it could be a scary thing for you. And then we also help you, and depending on your credit score, you're required to come to housing counseling if you need down payment assistance. And most of our first-time home buyers do need down payment assistance, and our non-first-time home buyers can use these programs as well. So if you want to, you know, if you have a lot of questions, I think housing counseling is a great place to start.
I agree.
So for first-time home buyer assistance, like, how do I want to say this? If you're a second-time home buyer, but there's been a stretch of time, can you still be a first-time home buyer?
Yeah,
Know what I
definitely.
mean?
Hi, good afternoon. I'm Laura with Stand By Me. As many of you know, we provide free financial coaching. So we do refer to our colleagues within housing counselors, agencies, as well as Marianne and Meridian and any of the other mortgage companies. The relationship we have with Fulton and Meridian is strong. If you have or in need of credit repair or credit resolution, all of our services are free as well. And you know, the first thing that you want to do is really make sure that you are credit worthy in regards to the minimum standards that everyone has already discussed. So you want to make sure that the things that you need to get rectified on your credit report are rectified prior to going through that process of applying for a mortgage, because obviously there'll be a hard pull done on your credit report. And if you're able to do a soft inquiry prior to make sure you've addressed all those issues before proceeding is probably ideal.
Awesome. Thank you for that. Hi, Laura.
Hi, how are you?
Good.
I do want to add something else too, that we are now doing. So at least 3 days before closing, we're contacting your job to make sure that you're still working like we normally did before, but now it's mandatory that we contact your job to make sure you're still currently working, and that when your pay stubs, it does not say COVID pay, because that could be a problem also on your pay stubs. Because sometimes people they don't get the overtime on COVID pay. It's just a regular straight salary. So we need to know that you're still back to work and it's business as usual for you, because that COVID pay is totally different.
So at that point, suppose you had, you know, you've been affected by COVID, you're not working, and then you go back to work. So how much history do you then need at that point to apply for a mortgage?
So as long as you can prove that, we're going to call your job, of course, they're going to verify that you're back to work with full pay. That's fine. No problems there.
And,
Correct.
But
and you can still use your 2-year history even though you had a break.
As long as you're back to work, yes. I did have a case where the customer was unemployed. They get unemployment now. And I can't do the deal anymore until you're back to work now. We can't do the deal on unemployment, which is sad, because they went through the whole process, ready to close, and all this happened, and they don't have any income anymore. Even though the job says they're going to be back, we can't guarantee that job's going to be back.
Now, if there's any lapse, like for say, you know, let's say, for example, they were working for an employer, but then they were furloughed for the month of April, but they've returned back in May. How does that affect?
It doesn't, it's fine. As long as your income stays the same and nothing changes, you're fine.
Okay.
Marianne's the same for you, right?
It may impact if we're using any overtime or bonuses to qualify. If you're no longer working overtime and that was needed for qualifying purposes, that does come into play your year to date. So, but base salary, it does not. As long as we use your base income for qualifying, you're fine. It's only in the case of overtime.
Okay, so Marianne, what about the stimulus checks, that people have received? Will that make a difference in regards to their bank statement?
No, because we can document that just like an IRS, IRS refund. So we don't need to document that.
Okay. Good
Plus,
question.
some of the other housing counselors out there, and amazingly, even though we're going through this COVID, we've seen an uptick in pre-purchase clients that are coming to us. So there's a lot of people still purchasing homes right now, surprisingly. We can barely keep up with them.
That's
Good.
awesome.
That is awesome. That is awesome because I had the impression that things would people wouldn't be interested in purchasing homes at this time. So that's awesome.
Well, rates are so low right now that I think, if you can do it, and I'm going to, and honestly, doing these DHAP applications for rental assistance, I'm going to say the average rent that I'm seeing is between $1,200 and $1,800 a month. And that's a mortgage payment. So, and most of these folks that we're working with, they've never had a late payment with they probably could qualify for a home, and they just don't know that.
Right, exactly.
So,
well, in qualifying for a home, that will be another question that someone's looking to purchase a home. They're looking to purchase. So we already said that we have the pay stubs and the bank statements. There's 60 days. Anything else that someone looking to purchase a home needs to look out for, or that they can think about in preparation for home ownership?
Well, just like Laura had mentioned, they offer the soft pull on the credit report to make sure that their credit is in line with the strict guidelines that are in place today. So that is highly recommended to meeting with a housing counselor to get that credit report reviewed to move forward.
You also want to make sure that credit reports do not report on any judgments or liens. So, if your client has the possibility, or your customer or your colleague has the possibility of having a judgment or a lien, that needs to be rectified and resolved prior to moving forward, because that will affect you when you're looking at closing, and it could impact your ability to purchase that home.
Correct. And it usually doesn't show up until the title search. The attorney does the title search, and they will show up if there's no. That's one of the questions though on the application. Are there any outstanding judgments against you? And if there are, we do need to take care of that before settlement.
So what would that be? Judgments on like former rentals, or judgments for
anything?
It could be anything: repossessions, taxes, rent, a delinquent bill, anything. But you need to make sure that has been resolved and that has been reported. And sometimes that may take time, and it is up to the discretion of the lending institution on what they will accept in regards to proof of resolution.
Okay. And so with that, the next question, what kind of things are acceptable for proof of resolution? Does it need to be like a letter from the lien holder or the person that inputted the judgment, or does it need to be reported to the credit bureau? Does that count as proof of satisfaction? How does that work?
You need a release from the creditor, and it has to be stamped and released from by the courts. Yes.
Okay.
I think another document that's really important, and this is going to be very important when we get past COVID and people are looking to do loan modifications or they're coming out of their forbearances, their tax returns. A lot of mortgage companies, for us to get a modification done, you have to show your tax returns. And even though they fill out a 4506T form, the lenders, just about all of them, require you to submit a copy of your tax returns. And I'm going to say 65% of the time when I ask somebody for that, they say, I filed them electronically and I don't have them anymore. And, you know, that can burn up a lot of time for somebody that's looking to get a quick resolution. So, I mean, tax returns are really important, making sure you keep all of your documents in one place. When you buy the house, you know, making sure that everything is in one place so that when we need it, it's there.
Okay, and I've heard a couple mentions about loan modifications. Can someone explain what that exactly is? As a loan modification would be a resolution to someone who's coming out of that forbearance or, you know, going into that. What exactly does a loan modification mean or do for a home?
So simply a loan modification is refinancing your mortgage, but for somebody that's delinquent. So if you're making payments on time and you want to reduce your interest rate, you would go to a lender and you'd ask them to refinance your loan into a lower interest rate. If you're delinquent in payments and you go to your lender and ask them to refinance your loan, they're going to say, I'm sorry, you need to have 12 months of on-time payments before we can do anything for you. So your only option is to work with the lender to see if they'll take those delinquent payments. And there's several things they can do. They can put them back at the back of the loan. They can, you know, incorporate them into your monthly payment. Sometimes you don't qualify for a forbearance and you'll do a repayment plan, which can be really expensive. They'll take several of your missed payments and add them into 3 months of payments or 6 months of payments. So there's lots of things that can be done. And again, working with a housing counselor or Stand By Me or somebody like that is really important, because not everything works for everybody. Just because somebody offers you something doesn't mean it's the best solution for you. And then Delaware State Housing Authority has a mortgage assistance program as well for folks that are delinquent. And you have to go through housing counseling for that. So.
But you know, you always want to start with your actual lending institution first to see what kind of programs that they have. And, you know, as Marva's already said, you know, it is really important that you have an advocate on your side. So having a housing counselor or housing counseling agency to really navigate through those waters is really important, because a lot of people do not read the fine print, and it could end up resulting in a balloon payment that you may not necessarily be prepared to pay. So, but again, with refinancing, you know, you want to be cognizant of the cost expenditures that is going to incur, because when you do a refinancing of a mortgage, you're not just paying for it's not just the purchase price of the house, it's actually the loan. Plus, in addition to that, you have to add in additional closing cost expenditures. So, and unless you're going to look at a substantial amount of savings in regards, it may not necessarily behoove you to do a refinancing. And that's, again, something that you want to consult with your lender and housing counseling agency to find out, is this the best move for me?
Okay.
And you can also pay your closing costs up front when you do a refinance. You don't have to finance it into your loan.
Right. You could also pay down a point, you know, a point and a half, bring down your interest rate too, and not necessarily refinance. So there's an option too.
Okay, so you have those same options. I know that those paying down points and paying your closing costs up in full are options for the initial home purchase. So they are also the same options you'll have in a refinance or loan modification as well.
For a refinance.
Yes, but
Okay.
The loan modification is just how are we going to get you current again?
right.
Okay. So with that being said, in regards to what things people should ask, are there any kind of mortgage relief scams? Have you guys come across anything that people should kind of beware of, or, you know, be on the lookout for in regards to mortgage relief during this time?
Definitely. This is the time that the scammers are out there. Laura, I know that you've probably had people with their stories. Well, I paid this company $3,000 and they said they were going to, you know, modify my loan. Well, that's $3,000 you could have paid directly to your lender. So from my recommendation, and most housing counselors, we will tell you, work directly with your lender. Don't do anything that comes in the mail. Just ignore it unless it's from your lender. And we've even had emails come to people that look like they're from their lender and saying, hey, if you send us $1,500 or wire us $1,500, we can get you back on track. So again, it's important to, if you're behind in your mortgage, have those conversations with your lender, and don't send anybody any money unless it's your lender.
Right. You know what? And quite honestly, I cannot possibly concur. I get them myself. I get these, oh, you can go, your interest can hit 1.5%. Okay. On what planet? I would like to know what that exists at. And, it looks like it's a real, it says it's from, the VA. Well, because I am who I am and because I have the experience that I do, I know that that's not necessarily true. And I always refer back to my lending institution. I do the same thing when, I got an email from my car insurance. Looked like it was from my car insurance. It's pretty positive it was, but I still called them up and they said, hey, you can get a 20% discount. Great. Didn't you get our email? Yes, I just wanted to confirm. So I always side on the side of caution, because sometimes when it sounds too good, looks too good, usually doesn't smell too good. So I just, you want to make sure that you're aware of that. And unfortunately, these are unprecedented times. And there are some individuals and entities who are going to use that for their own favor. And they're going to, if you can afford to pay your mortgage now while you continue to navigate through this crisis, awesome. If you need assistance, there are programs that are specifically tailored to assist during this pandemic. But you always want to go to the source. And I just recommend that across the board with anything that you have to pay. And if you're paying the bill, I'm going to make sure that it's going to who it needs to go to.
Mm-hmm. Definitely. Anybody else have any tips on scams and schemes right now? Any proactive questions that you would want to ask your lenders, asking them what things they have? Is it a good idea to simply, even if you're not experiencing any hardship right now, is it a good idea to contact your lender to find out just what relief they have or what your options are? Just be in a way to be proactive. Is that a good idea to do?
I think, I'm sorry. I was going to say, take advantage of the fact if you're not being affected by this financially, possibly use this to make principal payments towards your mortgage so you can get ahead of the game. And I'm sorry, I know Mary Ann wanted to say something.
Well, we highly recommend that if you're able to make your mortgage payments, to continue making your mortgage payments. Because at the end of the forbearance, all payments are due. And there is also, even though we don't report your account delinquent, there is something out there in the mortgage-backed industry that people are, what they call, they're not putting it as a delinquent payment, but in the remarks section on the mortgage report, it's stating that it's in forbearance. And then that could impact that client to be able to purchase a home down the road, sell and purchase another home, or even refinance. If that forbearance language is on the remarks section that we're seeing by some lenders on the credit report, that can deter them from doing anything for 12 months until it's current for 12 months.
Okay.
So even
That's
though,
great to know.
yeah, and it's coming up in the remarks section, not as a 30-day or 60 or 90-day delinquent. It's in the remarks section of the forbearance. So that's something that's new. I'm reading about it now, and we're seeing a few credit reports with that on it. Mm-hmm. And that's going to be a big impact on borrowers wanting to sell and purchase or refinance.
You're muted, Stacy. Hold on.
I muted myself. I'm sorry. That is very, very true, Anne-Marie. Mary Ann, I'm sorry. I did see also on some credit reports, it says COVID disaster. Mm-hmm. I've seen that on several credit reports also. It says COVID disaster. Prime example, I think one of our first deals that we had since the COVID situation was a refi. It happened to be mine. And the customer did a forbearance on their property. And we did the refinance with the forbearance on there, but we don't know what the end results are going to be. We don't know if that's going to affect us with other investors trying to purchase that deal down the line somewhere, because the guidelines does say none of these transactions can happen for the next 12 months. So that's a major factor. Now, down the line, will they change the guidelines for this situation? We don't know. Right now, we can only go by the guidelines that's already been set in place for all these years.
Mhm.
So, on a question, what does the COVID disaster mean on a credit report? I mean, how does it impact the scores? How does it impact you negatively?
Well, that's what we're saying. We don't really know down the line what's going to happen, but like Marianne said, if you're trying to purchase another house, you have 12 months before you can even purchase another house or qualify for another mortgage. So that could be a major problem.
Is that simply because the remarks on the credit that it is in forbearance, or because it lists COVID disaster?
Well,
Or is it?
I think they're naming it one of the two things. So it is going to say forbearance or something dealing with COVID. That's the only two options, but it still falls under the same guidelines.
Mhm.
So, yeah,
So
current
what-
mortgage guidelines are that you have to show that you've paid your mortgage on time for the last 12 months. So that if you do even take 1 month forbearance and then start making your payments, that clock starts ticking when you're current again for 12 months.
Oh, for 12 months. Okay.
Mhm.
Do you think that given the situation that they may be making some alterations in regards to those mortgage guidelines?
They may, that guidelines can change at any given time, at any time of day. They're changing constantly. But as of currently right now, the guideline is that you have to have 12 months of on-time payments. And if they see that forbearance on there, they're going to question, we need proof that you've made your mortgage for 12 payments for 12 months.
Exactly.
Okay.
Wow.
Wow.
So
So
that
I
kind of oh, go ahead. I'm sorry.
I have a question. Is that a kind of a regulatory guideline, or is that a guideline based on each financial institution?
No, it's a federal mortgage guideline.
That is correct.
Thank you.
Okay. So is it safe to say that you should kind of look into those things when determining if you even think about your long-term goals, to say, if you have no interest in purchasing a new home or selling your home or anything like that, that 12 months may be okay with you to wait after the forbearance. It may be fine. So I guess that will be something that you will want to think about. What are your long-term goals, or what are your plans going forward, to determine if you do want to even take advantage of a forbearance
Correct.
for your mortgage. And
Correct.
if maybe you have to sacrifice something or whatever you have to do to make sure that that works for you, I guess that would be something that you will want to look out for.
Yeah, and I think if you can make the mortgage payment, you should make your mortgage payment. If you're offered a forbearance and you have, savings and you can make those payments, I mean, my recommendation is for you to make those payments if you can.
Right.
If you get the stimulus check and you can make a payment, I mean, the most important thing you can do is make that mortgage payment. The forbearance is really, something that you do because you have no other options. You have nothing in savings. You have no way to make your mortgage payment. And again, like Marianne and Stacy said, if you want to do a refinance, you're going to have to wait 12 months. If you want to purchase a house, if you've lost your job and you need to relocate, you may not be able to buy another house wherever you're going because of this. So recommendation is, if you can make the forbearance or the regular payment, do it. And we've had quite a few people call us and say, hey, I got a forbearance offer. And I'll say, well, can you make the payment? And they say, yes. And I said, well, make the payment.
Yes.
So,
Can you speak about pulling out equity out of that some individuals are looking at, pulling out equity to help them, through this crisis?
Yes.
Answer that. Hold on. Before you answer that, can we rewind back to
Sure.
forbearance really quick? Is that a question? If can you ask your lender? Is that something the lender can disclose if they are putting that remark? Will they be able to tell you if they're putting that remark on your credit, or is that something they?
We don't know right now. I'm sorry to say. It's all new to all of us. It's been a hot topic on the mortgage industry of what is actually happening on these loans. So
Okay.
it's a very hot topic. We don't know, and the client may not even know what the lender is doing in the remarks section. So it would be in the remarks section.
Okay. Okay, we can go back to Laura's question in regards to pulling equity out of your home if you need to. What are any kind of guidelines for that?
Stacy, would you like to take that?
So just to pull equity out your house, just to pay your debts, is that what you want to do? Is that what
Yeah,
your
we've
question?
had some clients who've reached out to some of our coaches to find out. They didn't necessarily want to pull out, want to go through the whole process of refinancing, but that they were interested in possibly pulling out equity.
Okay, so just pull. So if you're going to pull out the equity, you're doing a streamline refi, or would
Yeah,
just a regular
streamlined
refi?
I think
Or an equity loan.
Equity,
a
yeah.
home
or
equity
HELOC.
line of credit,
Yeah.
if they don't want the cost involved with a regular refinance, sometimes a regular refinance in the case may benefit the borrower, where you're lowering their interest rate, they're taking cash out of the property, they're paying off some debts, and they're keeping their same payment and the same term. On that, it's a win-win. So for those clients, you know, like Stacy and I, we would do an analysis to determine what is best for that consumer. A lot of people are taking advantage of a cash out refinance right now, where there are closing costs, but they're lowering their interest rate, keeping their payment the same, and paying off some other debt. In other cases, a home equity line of credit may be the right answer, where there are very little closing costs, and they are keeping their first mortgage, but they're taking on more debt by taking a home equity line out for the short term. But yeah, it depends on the consumer and what's best for their financial position.
Thank you. Thank you.
But those still are options during this time. Lenders are
Yeah.
still giving people those options.
Correct.
Okay. And then I would say, is there anything else that we need to know? Anything that you feel as though is pertinent to a homeowner, a current homeowner, a new homeowner, someone interested in purchasing, anything that they would need to look out for, anything that you feel like is a need to know?
No, I would just say just stay in touch with your mortgage person and just kind of find out what the update, because guidelines change every day, like Marianne says. So what we talk about today, tomorrow will be a whole different conversation. I mean, literally, underwriters are sending up alert to change, alert to a guideline. So what we talked about yesterday can change overnight. So it would definitely want that that consumer to contact your mortgage specialist and let them explain to you what they can do for them.
And in your experience throughout, since this whole thing started, are things lender specific? Like, are they a Fulton thing or a Meridian thing, or has it been more across the board, like universal towards all institutions?
I think it's pretty much across the board. You know, Fulton does have, you know, for example, the Delaware State Housing Authority. They recently changed their, you know, the maximum debt to income ratio for a consumer can't exceed a certain amount unless they have a 700 credit score. So there's changes throughout all these programs. And then we have to make sure that we're on top of it, because like Stacy said, we could pre-qualify you a week ago, and then that's changed today. You don't qualify for the same program today. Pretty much Fulton has one overlay. We don't normally have overlays. We do now require a minimum of 660 on government loans. So even though some programs say 620, on government we're doing 660. We still have a couple programs that we do go to 620. We kept the 620 score, but there are, like Stacy said, they're changing every day. So we could get a notice tomorrow we now need a 660 credit score on this, or we can exceed a 43% debt to income ratio for qualifying purposes.
Mhm.
So just anyone that's in pre-qualification status now, I'm trying to stay in touch because we need to update it constantly.
Mhm.
Right, and
Okay.
we've seen a lot of that. I mean, FHA requires a minimal credit score of 580, but what we're seeing is most of the lenders that we're working with or the homeowners that we're working with are looking for 660 to a 680, and it can be confusing for a first-time buyer specifically because they're looking at this paperwork that's coming in. Hey, if you have a 580 score, we
Mhm.
can get you pre-qualified, but they're not understanding that there's different overlays with different mortgage companies. And also, if you're utilizing down payment assistance, there's also credit score requirements.
Mhm.
Correct.
So, and the one of the things I tell all of my clients, when you're working with your lender and you're in the process of purchasing the house, refinancing your mortgage, be 100% upfront and honest with your lender. If you lose your job, if somebody in your family that's not even on the loan loses their job and you're dependent on their income to pay daycare and things like that, talk to your lender. And I feel like some people are scared to have those real conversations, but you know, you have to be honest. And typically we found that the lenders are able to get around or figure out what needs to be done, whether it's waiting a month or, you know, redoing the loan in a different type of way. But sharing all that information is very important.
Exactly.
Right.
Great.
Right, and I would just add that, you know, Stand By Me is here, and it is a tool. We work with everybody on this Zoom, and we are here to help you through the process. So if you do have like a 580 credit score, we can assist you in identifying while working with your lender what are the issues that are impacting you.
Awesome. Awesome.
So I just wonder whether any of our guests, our listeners, have questions, specific questions that they might want to ask our panel.
And if you don't want to talk through out loud, you can relay your message in the chat and I can relay it
Mhm.
to our panelists.
And while they're thinking or typing, I guess my question might be like, okay, so if you all had your crystal ball and we get to the beginning of 2021, what do you think the housing lending climate is going to be like?
That's a good question. I
I
really
think
think
it's going to be strong. People are still buying today, which amazes me, you know, where there's restrictions with going into the properties and things like that, but it has not stopped people trying to buy homes. So right now there's multiple bids on homes, and a lot of my clients are losing the bid because there's bidding wars for properties. So I'm just hoping there's enough inventory to maintain the wants and needs of the buyers.
I would concur with what Marianne said, because honestly, we have not seen a we're getting across the board for Stand By Me. If anything, we've seen an increase in that, which tells us that, you know, the majority of those inquiries, their financial goal is home ownership. I think if anything, this has probably brought a bigger spotlight onto the lack of affordable housing across the state and across the country. And my hope is that with shedding the light on this reality, that it will institute some change in regards to construction of affordable homes for low to moderate income families.
I also agree with Marianne also. I think I'm busier now than ever. Normally during the summer months is our crazy months anyway. So we're licensed in pretty much every state. So with Pennsylvania not doing much business, I thought it was going to slow down for me. But no, we're still busy. So I'm like working from home, but doing 12 hours from home. So business is booming. And it is a bidding war. I mean, I literally have I have two different customers bidding for the same house a lot of times, and I can't tell you the one of them. And so they'll say, can you increase my pre-approval to this? Can I qualify for this? And I can literally see them going back and forth, but they don't know they're bidding for the same house, you know? So it's a different world we're living in, but business is still booming.
Mhm.
It is.
Yeah, and
So-
I think for me, we have a whole bunch of qualified buyers, and if they're approved for 180 or below, we literally have I have people that have been looking for a home for 2 years
Yeah.
and can't find anything affordable. So that's really something that, I think our state needs to look at, and we're really proponents of, is building affordable homes for, folks to be able to live in.
Mhm.
Mhm.
Awesome.
So I guess one question I have though is like, okay, in 6 months, and if people have gone through a forbearance process and they get to the end of 6 months and they're not able to pay and make up, what they've promised over that 6 months of putting off payment, what's going to happen? Are there going to be a whole bunch of houses on the market and foreclosures?
Foreclosures?
No, not necessarily. Delaware is a judicial state. And what that means is that if a lender wants to foreclose on a home, and I'm sure Mary Ann and Stacy are, have seen this, it takes an awful long time for a lender to foreclose on a property. They have to go through the mediation program in the state of Delaware. And that's when they work with a housing counselor to
Mhm.
try to come to a resolution. So typically I would say the foreclosure process takes 1 to 2 years easily. Before
And the lender
property
will
foreclosed
try
on.
to modify. I mean,
Yeah.
the lender will try to work with the consumer and do some type of modification, whether it's tacking it on at the end, spreading those delinquent payments out. They do want to work with you to keep you in the home. They don't want to do a foreclosure. But at the end of that time, we don't know until the end of 6 months what's going on, and each individual homeowner will have a different situation, and that's where we work with the counselor to see what's the best resolution for that consumer.
Yeah.
And I also would just add, we are not looking at the same thing we saw when we saw the housing bubble and the
Mm-mm.
ramifications of that. This is completely different.
Mhm.
So we again, we need to tiptoe, which is what, my colleagues here have stated through this process. But Delaware does an incredible job of really trying to keep the homeowner in their home.
Mhm.
They do that by offering an array of different services, a loan modification. There's, the Delaware State Housing Authority has a program specifically. The lenders are very flexible in being able to really provide those helplines to the lenders. The lenders provide additional resources and programs in addition to what already exists on the state and county level, because there are also county programs that can assist in foreclosure assistance.
Mhm. And there may be a future program that will come out, like in the 2008 and 2009 HARP, the Housing Affordable Refinance Program through President Obama came out. So there may be a program down the road that we just don't know about yet that will help the people once we get past the 6 months. There may be another program that can help them from that point on.
Mhm. Awesome. And in regards to like bankruptcy, so nothing's changed as far as home ownership and bankruptcy. I know someone asked me about that at one point. Has anything changed as far as home ownership and after a bankruptcy?
No, there's still standard seasoning requirements,
Mhm.
depending on the type of mortgage you're seeking, from 2 years to 7 years. Certain programs that we have are 3 years for bankruptcies. So each lender may have something different, but the standard federal guidelines are still out there. They have not changed.
Yeah.
Okay.
Yeah, we don't have any overlays either on that. So yeah, this still stands with exactly what's out there is what we do.
Okay.
Well, this has been really a wonderful discussion, and I really appreciate everyone sharing their expertise and helping to clarify all of the opportunities and issues that are out there. I really thank all of you for your guidance and your
Yes.
expertise and helping us to clarify kind of where we are in the housing situation and mortgage and opportunities to kind of keep your home really in this crazy time. So So thank you very much.
Thank you again. And I've also put that website in the chat, Marva, that you suggested, the defhc.org, for anyone who wants to follow up with that. If you guys have any additional resources, I can throw them in the chat also for anyone to take a look at. Or if you want to go ahead and verbally suggest any additional resources for people. I know we have Laura here from Stand By Me. Marva's here. Oh, there you go. So that's in there in the chat. For any assistance in regards to housing counseling, or if you're looking for lenders, you have these ladies here to help.
Thank you.
Right.
Yeah,
Thank you.
thank you.
And I just want to remind everybody, next week we have a session on scams. So if you want to learn a little bit more about some of the scams beyond housing scams that are mortgage scams, tune in next Tuesday at 3 o'clock.
Yes, we have a guest from the Better Business Bureau. So that's going to give us some insight as to what's going on with all the scammers. As they said, there's tons of scams happening. I'm getting mail, physical mail, and emails from people that are trying to do stuff. And actually, I've had a few people in my family I just got scammed in my bank account recently.
Wow.
So apparently the scams are at an all-time high right now. So
They are.
Hey, Jasmine or Maria, is there any way you can share the flyers for your upcoming,
Yeah.
so that I can share them with all the housing counseling agencies and we can put them on our websites?
sure.
Awesome.
That'd
Sure,
be
I'll make
great.
sure to include you in those emails, Marva.
Great.
Yes, me as well, and I can push them out through both Stand By Me. I wear multiple hats.
All I heard, you kind of broke up, Laura, so I just heard you say both Stand By Me, and then I missed the second one.
And 211,
Okay.
because I assist to manage both 211 and Stand By Me.
Okay, so I'll
Great.
reach out to you soon too, because I got some questions.
Yes,
Laura,
ma'am.
that's a really good thing to put up there too, 211.
Mhm.
Yes.
Yeah.
211, we are the Delaware 211. We have extended our hours due to the needs for the last 3 months, which is probably why I look so tired. But we have our team is working Monday through Friday from 8 a.m. until 9 p.m. and Saturdays and Sundays from 9 until 5. We are getting around 300 plus phone calls a day that we are assisting individuals with. We help them with an array of different issues from housing. I would say that housing is one of the biggest concerns with our callers, both with assistance with their mortgages, assistance with rental assistance, ability to pay, utilities. So we have been working and distributing information in regards to an array of different programs that have offered additional resources like Comcast, like Verizon, like Delmarva, like the ability to, the governor's executive decree for no evictions. We also have the opportunity to be multilingual. We use the language line, but we do have bicultural, biracial staff to assist. I've been doing, and I also manage the Stand By Me Facebook page as well as 211. And I'm also state commissioner with the Delaware Hispanic Commission. So getting the information in both English and Spanish is a priority. So we've been doing that as well. We've been fielding calls for the Delaware Public Health in regards to testing sites and locations and screenings across the state. So yes, I wear multiple hats. I sent my email right there. So if anyone needs anything, please feel free to reach out and I would be happy to be of service.
Okay, will do.
Thank you
Thank
very
you,
much.
ladies, so much. We do appreciate it. And thank you for those that attended. You can visit themoneyschool.org for additional classes that are upcoming. And yeah.
All right.
Thank you.
Thank you. Have a great day. Thank you.
Thank you,
Have a good
everybody.
one.
Thank you all.
Bye-bye.
Bye.